With the interest rates being higher than relatively high over the past few years, debt's a bit harder to secure, all things being equal. Cash flow companies are in high demand. Where are you seeing valuations? And this guy kind of starts, we can go down the list or the panel. Like, how are private equity valuations over the past 2 years, and any thoughts of where it's going?
In the end of the day, as we say, interest rates really don't matter because they're factored in both on the buying and selling of companies. So, for example, if you're in a high interest rate environment and you're selling your company, you have the opportunity to reinvest immediately in high interest rate products as your investments. What's more important today is how much can that company be improved? What's the opportunity? Is it a company that's been through 3 iterations of private equity firms? Well, maybe the juice is all out of that lemon, but if it's a family-owned company with improvements to go, it can still return a very handsome valuation, and it shouldn't be a big concern. Remember that the growth, the birth of the LBO market was in interest rates higher than today.
Right.
I would say where I work with is in the technology space. And what we're seeing is, in the peak from 20 to 22 was really high. And now they're moderating, but our valuations we're seeing are still 1 to 2 times lower than what they were. Now, this affects sort of 2 things in the private equity world: your current holdings and then your deal sourcing. Right? So what you're looking at with your current holdings, are you in a buy high, sell low because you bought during the peak, and private equity holds for 3 to 5 years typically. And so now you're like, well, what are we going to do? So you've got sort of 3 options you can look at. You could sell, reallocate your capital and invest it somewhere else. Or what you can do, and a lot of them are doing, is how do we have some good financial structuring to extend the hold time and look for the operational efficiencies? Because you can get the premium multiple if you've got the cash flow positive, you've got growing EBITDA, and you've got growing revenue. That's where you're going to get the win regardless. Or you can get creative. Maybe you're doing some dividend recapitalization, you're doing some partial sale, something to get your LPs some funding back. What we're seeing on the deal sourcing side is not going after trophy hunting. It's not just about where's the fast growth on the top line. It is more about pre-deal planning. So if you're working with private equity now, they're going to take a little bit longer on their diligence because they want to see whether or not you have multiple pathways to value creation. Yeah, not too worried about the interest rate, but let's get the value.
What do you, from a liquidity standpoint, from deals actually getting closed, do you see that getting any forecast? I mean, I know forecasting stuff, but like, what's the tenor? Is it just still really locked up out there, or do you see more deals kind of getting towards the end where it's something's going to occur?
There's a lot of desire to have the deals end because there's more opportunities, and in a fund, the capital's tied up until you can exit. So there's a lot of interest in exiting, but not at the cost of a much lower return.
Yeah, I would say interest rates haven't changed valuations as much per se. What it has changed is the companies actually have to work. So there's less arbitrage, if you will, but it definitely peels behind the curtain of what you're actually buying, and the cash flows and the operational efficiencies, that's what's been said. It does parse away companies that aren't operating as efficiently as they should. So that's what we've seen interest rates change in terms of deal flow and portfolio companies that we're looking at.
If you are a founder, raising capital, developing real estate, or you're an investor, would love for you to get involved in the Family Office Club. I've run this community for 18 years now. We've hosted 300 live events. We have 17 million social media group members and followers. We have the #1 YouTube channel on family offices. We have the #1 most popular podcast on family offices. You can learn more about us and our membership options at familyoffices.com. We have 30 in-person events planned in 2026 and another dozen events this year. Please go to familyoffices.com to learn more.